Hey everybody, welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we had a day with the market bouncing back. Friday, the world was ending, the stock market was getting crushed, the economy was headed towards recession. Today, people after the weekend taking a deep breath and saying maybe things aren't quite as bad. Now, listen, I still expect further downside, but the buy the dippers are still lurking out there, and we are seeing them come back in today. Nvidia up about $3. Apple debuted their new iPhone. That stock, again, flushed initially, but it's actually fighting back to the flat line. So let's take a look at the markets today here, folks, as we get into it. What we can clearly see here, green across the board, right? Dow up almost 600 points. We have the NASDAQ up about 156, almost 1% there. S&P 500 up 1.4%. Oil's even bouncing today. We have up 50 cents on oil. Gold is fractionally higher, and Bitcoin snapping back today. Look at that on Bitcoin, folks. Up $2,200, trading just above 57,000. So what went on today? I mean, why the heck are we seeing a snapback? Well, number one, again, people said Friday, I think it was a shock. It was, oh my goodness, these jobs numbers missed. The revisions were like 3 months of revisions down. It was just horrendous. And it was the shock value. It was also going into a weekend where last month, when the jobs number was reported on Friday, remember the following Monday we had this massive collapse in the markets. We were down as much as 6% on the NASDAQ. So people, again, just were uncomfortable with those economic numbers and then didn't want to hold into the weekend because of what happened last month. By Sunday night, people saw futures were not collapsing. We didn't have the Nikkei with the issues like we had last month. So all of a sudden, buy the dippers came back out of the woodwork. You can see here we have the heat map. The heat map generally green here. Even Apple, which is gray, just telling us it's either up or down less than 1%, just down 1/4%. But Nvidia, Microsoft, really good price action, a lot of green. The only really laggard today is Google. Google's getting hit by over 2%. That chart does have very, very good technical support at $141. I'll look at that chart in just a second. All right. Speaking of charts, let's get into it. Here's your intraday price action on the S&P 500. If we flip over to this, let me clear off my lunch, we can see that we opened higher, went up, then there was a little bit of profit taking, people feeling a little nervous, but look at this. I mean, this is just showing you how light the volume was and the buy pressure. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 straight green candles on the 10-minute chart. So again, that's 110 minutes of upside with no pullbacks in the S&P 500 before you did get a retrace, which led to this, and now we're floating back up. Now, the only thing that I'm seeing that's a little concerning, I have to wonder, is this a head and shoulder pattern on the 10-minute chart of the S&P? Shoulder, head. Is this a shoulder? We don't know yet, but it is a concerning potential pattern that I'm watching in for tomorrow. The way you would trade this, you take that low, which is the neckline, you connect it to that low, and you drag it out. And if price comes down and breaks here, then you have basically a measured move, and I go over this a lot with you guys, in terms of that distance gets replicated down here, it would probably bring us down to this level. And this is, again, an intraday chart, so it's not that big of a move, but it just kind of potentially puts a hole in the potential for a rally that could continue. Speaking of the rally continuing, let's take a look at the daily chart here on the S&P 500. And again, the S&P 500, to me, when I look at this, I see the potential for a double top, right? So did we make a double top right here? Are we putting in what we call an M pattern? An M pattern, again, is a big up move, a pullback, a big up move, and then a bigger pullback like that, creating the M pattern. And let me just go over that pattern formation. So it's a bearish formation. It's called an M pattern, MA pattern, really. But if we just drag this over so I can draw, we can do that real easily here. Boom. There we go. We get a nice blank screen. So the M pattern is this on a stock or on an asset. And then what you get is the A pattern. The A is another leg up before a bigger flush. So the M pattern basically has even, I mean, it looks just like an M, right? But the key is this. If we curl down, you'll get a bounce, right? But it's the A pattern that you're worried about. That's the bearish part. And what usually happens is you go back up to the midpoint of the M. That's your resistance line. And then the next leg comes in just to keep it on our radar on that daily chart of the S&P 500. All right, if we go to the NASDAQ 100, there's actually an even more concerning pattern here, though granted still untriggered. So remember, the difference between triggering and untriggering here In fact, let me just get rid of these lines here. So the biggest worry that I have here on this chart of the NASDAQ 100 is that are we forming a head and shoulder pattern? So is this a shoulder, head, and shoulder? Again, I don't know. We don't know yet. It has to trigger. To trigger, again, it has to break the neckline. But if it does, you're talking about a major move down. I think I calculated it out. If this pattern triggers on the NASDAQ, you're going to like the 12,700 level. That's a big drop. That's about a 32% drop from the all-time highs. All right, talking about a few stocks today. We have Oracle after the bell reporting. Take a look at the intraday on Apple. We're rallying up, almost going green here. In fact, markets did close. But if we go to your daily chart on Apple, it's not a horrendous chart, but it certainly does make you just wonder how much more upside there could be here, right? So again, Apple, here you have a high, you have a lower high, and then to me, there's a trend line right here, right in this range, right? So that would be where, if we come down here, this would be technical support for a bounce. But again, right now, you can see we have higher lows, low, higher low, but also lower highs here. All right, so again, this creates what we know to be a wedge pattern, and then ultimately, which way does Apple break? But it looks like Apple actually closed green on the day, up 9 cents. So congrats to Apple. At one point this afternoon, it was down close to $4, getting flushed out after they unveiled. It's usually a sell the news, and it was, but buyers came right back out of the woodwork. NVIDIA today actually had a decent little day. It did get a bounce. Same thing, though. The biggest concern here, and I have it all drawn out, is potentially that head and shoulders, which mimics the NASDAQ. We know NVIDIA is the NASDAQ, so it should not be surprising that you have this sort of pattern formation. All right. Lastly, before we get into some commodities and crypto, guys, don't forget we have Oracle earnings coming out in about 2 minutes. I know the earnings trader guys in the trading room are trading this. I have my levels already isolated down. Right up here, there's a big level right up there. Let me make it so I can do that. There's your level of resistance right near the 150 level. And then if it really flushes, there's a triple threat, 3-factor support area between 124 and 126. We'll see what those earnings are. They should be out in about 2 minutes. Just enough time for us to go over Bitcoin here real quick and see what we have. So Bitcoin, last I checked, was having a robust rally day. So great to see that moving to the upside right around 57,000. But again, it's still below the pivot line. So as long as it remains below this line here, guys, again, bounces are great, but you expect it to eventually roll over. Now, if at some point it can reestablish above that and confirm, now that's where the bullish bias really takes over. The bulls take control, and they ram this thing up into the 69,000 level. But right now, anyways, great bounce. I love it. Hey, we took profits on Chainlink today in Smart Money Crypto. That was a 15% gain. We bought that on Friday, already out of it. We have multiple other positions in the money because I am long some of these, even though I'm bearish, because I'm a swing trader. Remember, I'm taking advantage of technical levels for bounces. We grab our money and run. But overall, you still have to favor that downside move until proven otherwise. Gold today, very minimal price action, holding steady. You have this support area right through here, right? So we have support, we have resistance right up here. And again, it's just going sideways. I'm still slightly negative on gold in the near term, although robustly bullish on it over the longer term. Silver today, same thing, nice little bounce. Good bounce on this. We have our downsloping parallel channel, resistance around 29.50, major support around 25.50. I'm just leaving it alone until it either runs into resistance or hits technical support. Oil today, got a small bounce on oil. Certainly not a big bounce, though. So it's broken down. Remember, I covered my short on oil late last week. That was fine. And what I'm looking for, again, is a retrace to the scene of the crime to reignite that short for that next leg lower. Again, I still think the macro data is going to get worse and worse. Lastly, natural gas, and then we'll take a quick look at Oracle here to see what's going on. Natural gas getting pummeled. Notice it closed above the line. Ask yourself, did it confirm? If it doesn't confirm, it could be a fake out. Right now, this looks like a fake out. I wonder how many people got stopped out on shorts and also jumped long here thinking it was going to be a breakup. Obviously, if you follow me, you wouldn't have been faked out if you know the confirmation signal. But there we get that reversal today, and natural gas down almost 4% on the day. All right, Oracle just about out here. I'm going to bring up the chart. We'll take a look at the price action on Oracle here. We're going to go to extended hours trading so that we can see on the 10-minute if it makes a big move. And then I'll conclude here. Oh, looks like you had an initial pop. I don't know if that's out yet or not, but certainly a big move up to 144.50. Let's see what happens right here, guys. Let's see if we get a move. Oh, here we go. Whoa, it's getting crazy. Starting to sell a little bit. There it goes. There it goes. 137. All right. 136 is. Again, you know, if think about how many charts I've gone over, guys, and a lot of them end up selling, although maybe this can rebound here. We'll see. So far, not a huge percentage move, but it is fun to watch. You got to admit, it's exciting to watch these moves here. Now it's starting to push up. 150 is a key level, guys. If it gets to 150, there's a short. 126 to 124, there's a long here. But again, just coming out, I have no idea what the numbers are. Frankly, as a technical trader, you don't really care. The price action is the truth teller. Whether it was good, it would go up. If it was bad, it goes down, right? And right now, you can see the algorithms are trying to figure it out. Algorithms are way faster than you and me. They're sparsing, they're reading all the words in the press release, and they're deciding is it good or bad. And then ultimately, price will eventually figure itself out. But right now, it's starting to push up. Look at this. Here we go, 145. Whew. Man, that's fun. All right, I'm going to actually get back over to the trading room. I might be trading this here if it gets up to 150. You guys have a great rest of your day. Thank you for tuning in. Thank you for supporting Verified Investing. I'll see you tomorrow. Take care.